Echobit Research issues a critical warning. Bitcoin has dropped below the $100,000 support level, signaling a major market turning point. This decline, despite favorable macro conditions, is attributed to weak ETF inflows, reduced institutional exposure, and overall market structural fragility. Analysts emphasize Bitcoin is at a critical liquidity pivot, with its next move heavily dependent on Federal Reserve policy and global liquidity trends. Bitcoin just crashed below $90,000 for the first time since early spring, triggering widespread fear. But what's really driving this? Top analyst Darkfrost points to major institutional players, specifically Galaxy Digital, offloading over 2,800 BTC, intensifying sell pressure. While fear is high, some analysts suggest this heavy selling could be the final stage of a market reset, testing the critical 200 moving average. Despite Bitcoin's recent dip below a crucial support level, signaling a potential drop to $75,700, a deeper look reveals a surprising trend. This move below the MVRV mean band, a fair value indicator, historically precedes further declines, with $75,700 as the next major target. However, Bitcoin whales are aggressively buying, and Wall Street analysts predict a 40% rebound, reaching new all-time highs by late 2025. This new platform is offering up to 11% APY on stablecoins, directly addressing DeFi's biggest security and credit risks. Their institutional yield platform, backed by Monarch, FalconX and Fortius, provides up to 11% APY on USDC and USDT. It aims to restore trust in on-chain finance through robust legal frameworks, real-time reporting, and AI-powered sequencer-level security. Bitcoin just triggered a death cross and closed below its 50-week moving average, signaling a major shift in the crypto market. These critical technical signals, with 80% of on-chain metrics now bearish, point to a potential bear market driven by macroeconomic uncertainty. Recovery, above $105,000, hinges on dovish Fed policies and positive economic data, or the 2022 bull run could officially end. Top crypto analyst Arthur Hayes warns Bitcoin could first plunge to $80,000 before a massive rebound to $250,000. He attributes this initial dip to tightening US dollar liquidity and brewing credit stress in the market. However, Hayes believes a deep correction will force policymakers to inject liquidity, sparking the rally. Ethereum's Dencun upgrade has slashed average gas fees by 95%, dropping a simple swap from $86 to just 39 cents. This 95% reduction, thanks to Dencun and Layer 2 networks processing over 1.9 million daily transactions, shows improved scalability. Yet, despite historic lows, gas fee volatility persists during major events, proving market dynamics still cause unexpected spikes. If you're holding WBTC or ETH, pay attention. A major Aave borrower is on the brink of liquidation. This whale, with $146 million in USDT debt, has a health factor of just 1.05. Think of the health factor like the fuel gauge on your car. It's almost on empty. A mere 5% drop in BTC or ETH could trigger forced sales, highlighting the extreme risks of leveraged DeFi positions. Despite a massive 35% correction, what if Ethereum's recent whale sell-off is actually a hidden, bullish signal? On-chain data reveals a significant rebalancing. Long-term holders are taking profits, leverage positions unwind, and institutional treasuries absorb this supply. This isn't a collapse. It's a structural shift, moving ETH from speculative to long-term institutional hands, potentially signaling a supercycle. Imagine investing in a luxury resort, not after completion but during its construction phase, through digital shares. The Trump Organization and DAR Global are doing just that in the Maldives, launching the world's first hotel development, Tokenized from inception. Think of it like buying a piece of a future vending machine. You own a share, and it operates based on blockchain rules, no middleman needed. Despite a crypto market under intense selling pressure, a staggering $14 billion in stablecoins has been minted since October's crash. This massive influx from Tether and Circle acts like dry powder, suggesting significant capital is now on the sidelines, ready for deployment. Meanwhile, XRP stands out with an 89% surge, defying the broader market's bearish sentiment and Bitcoin's fall below $100,000. A recent 75% surge in MetaMask's transaction volume reveals a crucial shift in the crypto market. But what's truly driving this renewed interest? This uptick underscores growing investor confidence in digital assets, with stablecoins like MUSD gaining traction as safer alternatives. Fintech giant SoFi's strategic expansion into crypto further bridges traditional finance with innovative blockchain solutions, driving wider adoption.